Alright, welcome to another video. If you're new to the channel, we have just started first couple videos, so if you want to check those out, please feel free to do so. But as the title says, we are going to be going over discount and premium. This is one of the most important, simple, but also complex tools that you will use in trading. It is something that you can pair with a lot of other ideas when you're making a trade setup, and to me, it is one of the most important. And with that being said, let's get right into it. So discount versus premium, okay? Now, simply, this just means you want to buy low and sell high, and it is literally just a Gann box. You can use a fib and adjust it to your liking. I just use a Gann box, right? This just shows me equilibrium. It also shows me discount premium. Very simple, right? So premium is the upper portion of the box, and discount is the lower portion, okay? There we go. Now, with that being said, you want to buy in discount because it is cheaper, okay? It's the same idea as going to the store and something's on sale. More people are willing to buy something when something is on sale, okay? And people are more willing to sell when something is more expensive, okay? It is a very simple idea. The only complex part about discount and premium is how to mark out your ranges, okay? That is the only thing that makes this hard, okay? So to give you a better visual, right, you want to be shorting, hold on, let me just adjust, okay? So you want to be taking longs in discount, and you want to be taking shorts in premium, just like so, right? Okay, so to show you, I guess, a little bit more of an example, just like so, okay? So with this example, we have, buy side liquidity, and then let's say here we have sell side liquidity, right? So we have basically lows resting down here, right? There we go, okay, bro, there, okay? And same thing with buy side. So the way you mark this out is from swing high to swing low. So I take my swing high down to my swing low, okay? And same thing, right? Swing low to swing high. So anytime you see that we make a low, right, and then make a high, you mark it out just like this. So in this case, this was the pattern, right? Boom, swing low, swing high. Now over here, it is swing high, swing low, right? Swing high, swing low, okay? Now we have draws above us, so we want to buy low, right? And sell high, okay? Just like we talked about above, you want to buy low and sell high, right? Buy and discount, sell and premium. So with that, I'm going to go into a little bit more complex, okay? So in this example, right, we now have a swing high and a swing low to mark out our range. Now, let's say that we decided to do something like this. Okay, there we are. So at first, right, we only had everything to the left. We had everything to the left of this line. But now we have this structure, right? So how can you mark out this range, right? Swing high to swing low, okay? So I'm going to actually just do that. Now, in terms of just discount and premium, this is a quality setup. Let's say we had an inverse gap right here, or just a bearish fair value gap. So not only are we in discount on a higher time frame, right? We're in discount, and we have draws above us up here, right? We have a draw here, we have a draw here, right? This could be Asia high, London high, New York high, hourly, 4 hour, it doesn't matter, right? Draws on liquidity. Now we have a new range, and we're in discount of this range, okay? Your risk to reward is much better when taking buy orders in discount, and sell orders in premium. And I'll show you what I mean by this. Okay, so if we're taking a long or a buy order, right, off of, let's say your model's an inverse fair value gap, this is what I trade, right? You would enter right there after we get the confirmation of closing through. Now, let's say you want to target a 1-to-1, right? I'm gonna put my stop below low. So you get a 1.5 or 1.6 if you round RR with this trade. We are in discount on both ranges, right? Super quality, that's what you want. Now, if I extend towards, let's say, equilibrium, then my reward gets better. And then if I move it up towards these highs, right, it just keeps getting better. Now, if you're looking to short in premium or in discount, if you're looking to short, right, it just doesn't make any sense. Like, I just don't know why you would do this, right? Now, with this example right here, right, we have our swing low to swing high. So now we're in premium, right? We are in premium. Okay, so for example, all right, anyways, we are in premium on the higher time frame, and we're in premium on the lower time frame, right? So this whole swing low, swing high, this range, we are in premium, and also in premium here, right? And we inverse. So you could take a short right here with a stop above the high, targeting maybe equilibrium, or if you wanted, maybe even down here somewhere, does not really matter, okay? The idea, though, is you're aligning the narrative on the higher time frame and the lower time frames. I hope that makes sense. Okay. Now, is it possible that in this exact example, right? We have 1, 2, 3. We have 3 relative equal highs that we could trade above, and then you end up losing. Of course, nothing's guaranteed, right? It's just more probable that this scenario right here plays out, right? Boom, you hit TP, nice, whatever, done, cool. You are just stacking probabilities in your favor. So in this leg here, you mark out swing high to swing low, okay? And as you can see, if you were to take an order down in here, right? Let's say you wanted to inverse this gap, and then you did. You take an order here with a stop below the low, targeting maybe just equilibrium, right? You would win the trade. Maybe you wanted to be ballsy and target this gap. Don't know why you would do that, but let's say you did. You win the trade, okay? Now, right, we create a high and a low. It's very choppy, and probably not a good example, but we could mark it out. So high to low, right? You want to take any type of buy orders here, any type of sell orders in premium. Now with this example, right, we tap into equilibrium, right? So we went from the swing low all the way up to here, right? Boom. What do we do? We basically accumulated, but we tapped equilibrium and went higher, okay? So I can go swing high to swing low. We are in discount. We have a new week opening gap right here. So I got draws there, and I got draws here, right? Boom. I have not even seen this. I actually don't know if this is going to go up or not, but we are in discount, okay? I'm going to have to wait for some type of confirmation. So maybe right here, I take a long. And maybe I target those highs with stops below there, okay? Let's see what happens.
So in this example here, I failed to realize when I was making the video that we had a higher time frame context to the left. So as you can see, we are basically making a sell model, meaning we have a bunch of sell side liquidity on this curve, and we've expanded much higher and we need to rebalance, right? So as you can see, there's a V shape into all of the sell side, all of these lows that were created on this curve, as I'm about to mark out. Right here is an example. Now, the reason why when I play price forward, we're able to take out that low is because it was in premium, right? But as soon as we tap into discount of the higher time frame range, as you can see, right, price is currently in discount of this whole range, we trend higher. So I hope this makes sense. You just need to make sure that you're not just looking at the lower time frame, right? You need to pair the lower time frames with the higher time frames, and when those align, you can have a high quality trade.